Financing, having a financing program, having some bank, lender, access to cash is actually a strength and not a weakness. But what is not an option is to try to grow without cash. And what is not a good option is to try to grow without cash and the wrong debt tool. Because even though you get that lump sum of cash, it's going to be difficult for you to project it onto the project and then get the cash back fast enough and accumulate the profit to manage the debt service. To think that you not having a financing tool is a strength, or you having a financing tool making you weak, is just a false misconception out there. Every business that's successful has access to cash. It is critical to be able to have financing in place for you to take on these bigger opportunities. And more importantly, perform when you get them. Because getting them is one thing, keeping them is another, and realizing the benefits and fruits of your labor, both before you get those customers and after, is essential. And then look, it's why we're in business. Your team, your leadership team, your family, and your employees, they're all counting on you to execute. And when you gain these new opportunities, that's only the beginning. The real execution occurs after you win the job, when you have to complete it, after you win the new customer, when you have to deliver. That's when this really counts. Welcome everybody to the next episode of the Construction MF'ers podcast. I am Scott Peper, CEO and founder of Mobilization Funding, and today we are going to talk about how financing does not make you weak. Financing, having a financing program, having some bank, lender, access to cash is actually a strength and not a weakness. We're going to review just how you should position it so you can be effective in communicating it and showing how strong it actually makes you to position you to win more jobs, finish more projects, attack them fast and early, and complete them in the most efficient way. Financing, it's not a weakness, it's a strength. Building anything, building some type of structure takes a lot of pieces, it takes a lot of tools. You can't just grab a piece of plywood, a bunch of nails, some other wood pieces, throw it on the ground and build a structure that's going to be built to last, or be strong, or work well. You take a structure that doesn't have a strong foundation built on sand, one rainstorm, your whole foundation's shot, and down comes your building. Up in New York, don't put the foundation into the bedrock, another series of issues and problems. It's the same thing. When you're looking at your business, it's all tools. What tools do you have? What foundational strength do you have? Are you building a 1-story, 2-story, 3-story building? Are you building a simple business, a more complex business? Is your business getting more and more complex as you grow? Of course it is. And you need the tools that are in place. There's no difference from a structured project with a building on top of it than there is a business that you're building inside of it. Every business needs cash to survive. Now, how you go about getting cash, there's plenty of ways to do it. If you want to do project after project, save your cash and build up a huge nest egg, and that's how you decide to grow and then finance your business, no problem. If you decide to bring in an equity partner, someone who can add some value other than just the money they provide, and they have the cash, great. You can finance your business that way too. If you don't have either of those things or don't want to do those things, you don't want to wait too long to grow when you have the opportunities. You don't want to bring in a partner that you don't feel aligned to, or maybe you isn't bringing any extra value, and you don't want to give up more of your equity ownership and a smaller or lower valuation, then financing is a great option. But what is not an option is to try to grow without cash. And what is not a good option is to try to grow without cash and the wrong debt tool. As we all know, merchant cash advances have come into the construction space. Taking out a daily debit or weekly debit loan when your business is paid monthly and at a higher interest rate over a 1-year period of time than you will earn in your gross margin, it's going to be really hard for you to grow. Because even though you get that lump sum of cash, it's going to be difficult for you to project it onto the project and then get the cash back fast enough and accumulate the profit to manage the debt service. So financing is a tool you want to use. There's nothing wrong with a merchant cash advance if you had a short duration period of time that you could pay it back immediately, but it doesn't work that way. If you have a line of credit from your bank and you're using it very disciplined and you're drawing that line of credit down, you're executing on your labor, you're buying material purchases, and then you're turning around and paying that right back down with cash, no problem. That works too. The bottom line is, you're building a complex business, and the more successful you are, the more complex your business is going to get. It has to have the right tools, and financing is a strength, not a weakness. Now let's talk about how you articulate that strength to your customers, to your employees, and even to yourself. Misconception number 1, financing equals weakness. Now, I don't know who, where, or how that came about in terms of construction or the world of construction or any small business growing, but it's a falsehood and a false misconception that we all have when we're growing. Here's the bottom line. Every single business in America has had to use cash one way or another. Very, very few, less than 1%, have not had financing tools somewhere along the way. Whether it was an SBA loan, a line of credit, borrowed money from friends or family, all of it is financing. Even if you borrowed money from yourself, your business has had to find a way to use cash. And so to think that you not having a financing tool is a strength, or you having a financing tool making you weak, is just a false misconception out there. Every business that's successful has access to cash. Most, the gross majority of them, have access to some type of cash coming from a debt source, even if it's themselves they're borrowing money from. But most have business lines of credit, banking. One of the first and fundamental changes is the ability to borrow money from a bank. That occurred in America long time ago. We wouldn't have had railroads across the country. We wouldn't have had the Industrial Revolution. We wouldn't have had a lot of things if banks didn't open up and start providing access to cash. Your business and the needs of it are no different. Having cash, having a loan program, having a financing tool that you use to grow your business, execute work, and perform is exactly the strength you need. And projecting that strength in that exact manner to your customers and your employees or whoever else you need to provide that information to is exactly what you should be doing. All right, number 2. Financing also helps you preserve much needed cash in the business. As your cash grows and as you complete project after project, customer delivery after customer delivery, deliver your service or your product to whoever it is you're providing it to, and they pay you, you're accumulating profit. And as you accumulate that profit into retained earnings, that cash on your balance sheet is going to give you lots of flexibility. It's going to help you weather storms of things that are coming that you may not expect. Think just 5 years ago when COVID came. Businesses that had a lot of cash and were sitting on cash were in a great position. Number 2, it helps you keep track of your taxes. You're able to pay those taxes early, or just more importantly, you're able to keep up with your taxes and not avoid. You're able to keep up with your taxes and avoid any critical errors that in not paying them. And lastly, capital expenditures. Sometimes there's pieces of equipment, there's trucks, there might be manufacturing equipment, there could be all kinds of technology, different things that you could acquire when you have cash that might not be perfect for financing. And it's the financing of your business that will allow you to keep your cash on hand such that you can take advantage of those opportunities. It may even be just large purchases of materials that you're going to use on a job, or protecting price on a job. Lots of things that you'll be able to do with that extra cash. And financing gives you the ability to preserve that cash. Number 3, seizing bigger opportunities. When you have a financing tool, you're actually able to take on projects or customers that you might not have otherwise taken on. You're actually able to take on that champagne moment in business when you walk in to a specific potential customer and you don't know if you're going to get the job or not. You don't know if they're going to give you that large purchase order or not. You don't know if they're going to have you come into 200, 300, 400 of their stores, but you're there trying. And then all of a sudden they say yes, and it's exciting, and you're pumped, and you have this amazing opportunity. You get back to your office, you're talking to your employees, you're talking to your leadership team, you're talking to your partner, and guess what? All of a sudden you get hit with it. The realization of what kind of money it's going to take for you to execute on that large order. This is where having a financing relationship can come in play. Knowing who your banker is or working with a private lender of some kind, having your stuff together, the structure, the tools, the program, now you can seize these bigger opportunities. You can go after them aggressively. You don't have to sacrifice the performance or the capability or anything else that you would normally do delivering your product or service to your regular customer base. You can deliver even a better product or service to your new customer base. It is critical to be able to have financing in place for you to take on these bigger opportunities. And more importantly, perform when you get them. Because getting them is one thing, keeping them is another, and realizing the benefits and fruits of your labor, both before you get those customers and after, is essential. And then look, it's why we're in business. Financing is a strength, not a weakness. Number 4 is leadership in action. Look, the best leaders are proactive, not reactive. The best leaders, they're out there thinking about what's coming next. They see the business 6 months, a year, 2 years, 3 years down the road. They have a vision in place and they're just executing to that vision. It is critical for you to be that leader inside your business. For you and your team to get to where they want to get to, you have to make critical decisions. You have to be proactive in place. And when it comes to a financing tool or availability of cash, you have to be the leader who's disciplined enough to either save all the cash for years and years so you have the money you need to execute and work without a loan program, or you need to be the leader that's building the structure that you need to be able to provide for a lender to see and analyze your business in a way they can provide you the financing. Because look, your team, your leadership team, your family and your employees, they're all counting on you to execute. And when you gain these new opportunities, that's only the beginning. The real execution occurs after you win the job, when you have to complete it, after you win the new customer, when you have to deliver. That's when this really counts. And leadership through action requires proactive, not reactive thinking. And in the sense of financing, it's knowing where your cash is going to come from when that moment arrives that you've been planning and envisioning. I hope this video helped you. I hope you take these 4 points to heart and you can actually see how strong financing and a loan program and a tool that you can use is a strength and not a weakness. It's a misconception that out there that you need financing makes you weak. There isn't a business on earth that hasn't had to use cash one way or another. And even if someone's putting that cash in themselves, the business is still borrowing it from them. Businesses only produce cash by delivering the products and services that they have created and doing it over and over again effectively and the way intended, and then preserving that cash. To get there and to grow, you need capital. And financing is a strength, not a weakness. I hope you found ways to articulate that strength to your customers, your team, and your employees. If you have, please give me a share below. Click on the like button. And in the meantime, you can find us on LinkedIn individually at Mobilization Funding, our YouTube channel, Mobilization Funding, and of course at our website, mobilizationfunding.com. Until next time, I wish you all the best and God bless you.